And right now we are 2 minutes away from the end of the trading day. Romaine Bostick here with Katie Greifeld, taking you through to that closing bell. It's a global simulcast. Carol Massar and Tim Stenovec join us from the radio room. Welcome to our audiences across all of our Bloomberg platforms. That includes our partnership with YouTube. 24 hours ago, Carol, we started off this simulcast talking about the big sell-off in markets today.
Yeah.
We start off talking about a pretty sizable rally.
Yeah, and thank you, Micron, really leading the way, just soaring in today's session and really raising the overall semiconductor area. That the SOX, the Philly SOX semiconductor index, it's up about 2.6%. It was up as much as 4% earlier in the session, but still a big gain, and that is certainly providing some momentum.
Carol's horrified right now because I just shared with her
Oh my God.
that the PATH train, and Katie, this is in your world too.
Yeah, please go on.
The PATH train, it's going to rise to $4 per trip by 2029.
That actually is news to me, and that is horrifying.
Carol was freaked out.
I was gobsmacked.
God.
Like, that's $8 one day,
Just
round
to
trip.
go to work, man.
Romaine,
That's not even the subway.
Romaine, this doesn't concern you.
Yeah, I don't know what you're talking about. The
Romaine
path, right?
doesn't
That's
leave the
Is
Isle
that
of
going
Manhattan.
anywhere? Is that like,
Yes.
There's a limo
is that
every
like,
day
is that like that
picks him
mythical
up.
S train that runs through Brooklyn or something?
No, it's a real train. It's great. It's clean. It runs on a schedule. But
Well, there
geez
you go.
Louise.
And there's your $4. It sounds like some value.
Just
Yeah.
swim across the river. I don't care.
You're
You
getting
and
what
me
you
both.
pay for.
I'll swim with you.
I'm sorry to be the bearer of bad news, Katie.
Thanks, Tim.
Yeah.
All right, well, here on this Thursday afternoon, for those folks who don't have to catch the PATH train, stick around. We are going to get some earnings in just a few moments out of FedEx and Nike, one of the last big companies to report this earnings season. Green across the screen, some optimism coming out of the latest economic data, some optimism coming out of the Micron numbers last night. The Dow Jones Industrial Average higher by about 69 points, or 1/10%. The S&P up more than 50 points, or 0.8%. The NASDAQ, that's your outperformer. The composite up 1.4%. The NASDAQ 100 up 1.5. The Russell 2000 says it wants to participate as well, adding about 16 points, or 0.6%.
All right, back to the S&P 500 I go, and you've got kind of an even split again. Another day, S&P 500, 263 names to the upside, guys, 237 to the downside, Katie. 3 unchanged.
Let's take a look at the circle, because it's also pretty much an even split, but visually represented, you can see there is a lot more green than red. A lot of that has to do with the fact that tech, communication services really outperforming today. That is a bright, beautiful green. But then you take a look at what didn't do too hot, and it was energy. This actually was your outperformer yesterday, but that was your biggest loser on a percent basis. Also, consumer staples losing quite a bit today, down about 0.7%. But that just speaks to the risk-on action, Carol.
All right, there's a lot of green there. I had a fair amount of things to choose from, but let's go right to Micron Technology, guys. At its highs, up 17% today, finishing with a gain of just over 10%, a top gainer in the S&P 500 and NASDAQ 100. As we know, we broke it down last night. The company gave an upbeat forecast for the current quarter, signaling surging demand and supply shortages are allowing the company to charge more for products. We saw that on top line in terms of growth. We certainly saw that in margins. So appetite, the voracious appetite for AI computing components, definitely pushing Micron to the upside. And then we just threw in the SOX there because that too, some outperformance there, up 2.5% in today's session. Speaking of a gainer, Lulu, let's go over there. If that was a top gainer in the NASDAQ 100, and that one at its highs up 8.7% today, finishing with a gain of about 3.5%. This as it came out that activist investor Elliott Investment Management has built a stake of more than $1 billion in Lululemon. They've been working with the retail executive Jane Nielsen, who is viewed as a potential CEO candidate to take over for the CEO Calvin McDonald, who we know is on his way out. But we know this is a company that has dealt with slowing growth and some other issues, a lot of competition in this space. Its stock is down nearly 50% so far this year, and about 7% of the float is short. And then I want to go to Trump Media and Technology. Check this one out, up almost 42% in today's session. This is kind of added to my list a little bit later on. This as the company came out and said it is getting into nuclear fusion. Who'da thunk? The company said it will merge with TAE Technologies. It's a closely held fusion developer founded back in 1998. It's a transaction valued at more than $6 billion. So, of course, Trump Media behind Truth Social. They're in a bunch of other things, but again, kind of pivoting the business, expanding out into fusion. We talked with our Will Wade and says, you know, fusion, it's a while away. Yeah.
All right, those are the gainers, some big gainers there. I got a few decliners, including a pretty big one. HP Inc., down 4% today. Hardware stocks took a bit of a hit today, some of them. Bloomberg Intelligence on Wednesday did flag concerns about HPQ's earnings, saying that fiscal 2026 EPS estimates have reset lower, reflecting expectations of PC margin compression from DRAM inflation and tight supply, hence Micron's good day. And these dynamics represent a 30-cent hit to EPS. That's according to the company. Woo Jin Ho wrote that of Bloomberg Intelligence. HP Inc. falling 4% today. Birkenstock also taking a hit, down 11.3%. Its worst day in more than a year. This after the company predicted a slower pace of sales growth in the coming year due to the impact of a weaker U.S. dollar and tariffs as well. Birkenstock expects sales to probably rise by as much as 15% in fiscal 2026 in constant currency terms. That implies annual revenue of as much as 2.35 billion euros. It's slightly below analyst expectations. And finally, Inspire Medical Systems. We talked to the CEO, Tim Herbert, quite frequently on our program. They make a medical device to treat sleep apnea, down 19.5% today. This after two regional Medicare contractors removed the new higher paying code that would affect Inspire's product to treat obstructive sleep apnea. JP Morgan calls the removal, quote, a disappointing reversal that represents a significant reduction in reimbursement relative to expectations for next year.
All right, well, speaking of reversals, let's take a look at yields. We did see a big drop in yields around 8:30 a.m. this morning when we got that CPI data as well as the jobless claims numbers. Those competed against each other, and you did see some of the worst of that drop in yields peel back just a bit. The net result of it all there on your screen, only down about 2 basis points on your 2-year yield after being down as much as 6 to 7 basis points. Your 10-year yield going to close out the day down by about 4 basis points.
Yeah, really interesting to see that bid come into the bond market. On the heels of that CPI print, there were a lot of nuances there. We know that it was muddied, if you will, by the government shutdown. I love the headline on the Bloomberg terminal calling it basically a Swiss cheese report. But you take a look at the market reaction. I mean, they're taking those numbers and they're saying that, you know, perhaps the Fed is going to hike a little bit more than maybe we expected in 2026.
Yeah, and kind of interesting. It was just yesterday, right, Romaine? I think you highlighted that, you know, the S&P 500 dipping below that 50-day moving average. Well, our Bill Maloney was just on with us, too, and it just went back up above the 50-day moving average. So trying to figure out this trend line is something we'll have to watch into the new year.
Well, I was watching this, too, because, I mean, if you remember, I mean, what was it, the kind of in mid-November, we also had a retest of some of those key moving averages, and you ended up getting a nice bounce off of it. I think the S&P ended up rallying like 6 to 7% after hitting that line back in mid-November. But it does get to this idea that a lot of what we've seen in this equity market has not been a true sell-off. It's been much more of a rotation, just a rotation out of those some higher weighted names, which of course then drags everything down. But that money has for the most part stayed within the market.
Well, we're starting to get some targets for the S&P 500 for next year. We spoke to Ryan Dietrich of the Carson Group. He was on our show just a few minutes ago. And he's been right for the past 3 years. He's very bullish when it comes to his outlook, but he says after a year, and he's a technicals guy, so after a year like we saw with the so-called Liberation Day and the lows of April and the rise since then, we're poised to see an increase on the S&P next year of 10 to 15%.
Hey guys, I know we're waiting earnings out of FedEx and Nike, but I want to there was an interesting story in the Bloomberg terminal. You guys are on the radio, but for reasons that never were explained to me, also on TV. But this has been like a trend now, and you've seen this actually play out with podcasting. And YouTube has actually really kind of gone all in on this. The idea that what used to be confined to just, you know, your ears has now become video as the main medium. And of course, they have ridden that wave to boost viewership and subscribership as well, though I do think we are getting earnings now out of FedEx.
As much as I would love to go into that a little bit more, FedEx, here is the red headline on the Bloomberg terminal. It sees full year adjusted EPS $17.80 to $19. Previously, it had seen $17.20 to $19, so bringing up the lower end of that range there. It sees full year capex $4.5 billion. That is in line with its previous guidance and estimates as well. Adjusted operating income for the second quarter they see at $1.61 billion. The estimate had been for $1.36 billion. Really interesting to see that guidance raise here, Tim.
All right, what's the stock doing? Up 3.3% in the after hours, up about 3% in the after hours. Raj Subramanian, FedEx's president and CEO, said The company delivered an outstanding second quarter, successfully executed our growth strategy, and advanced our network transformation while navigating a highly challenging external environment. He continues to say he's proud of the team members worldwide for their commitment to FedEx.
I think it's interesting, too, when you think about the turnaround plan that he took over. Obviously, a lot of it was also about moving into higher value business, meaning higher value deliveries, but also cutting costs. They do talk about that they are sticking by those cost reductions and saying that those cost reductions so far will be permanent in their words, and that savings from that will then, of course, be reinvested back into other parts of the business.
Yeah, they talk about FedEx Freight segment operating results decreased during the quarter due to lower shipments, higher wage rates, and the hiring of additional dedicated LTL sales professionals in preparation. It does sound like they still have some challenges, but we did see the stock pop a little bit higher in the aftermarket.